you will have all the documentation, analysis, articles, scoops, breaking news, everything you need to know at your fingertips. So it's a real time saver. What would have taken an analyst, 4, 5, 6 days to get up to speed, you can do in 2 hours.
Hello, I'm John Janarone, Editor-in-Chief of Tech Edge, back here at Nasdaq MarketSite. Thrilled to have with us today the Chief Marketing Officer of Octus, Jeff Winter. Jeff, thanks for joining us.
Great to be here.
So, the name has changed very recently, and you and I were just talking in the green room about this. Reorg was the previous company name, which has some roots back when you were doing a lot of distress stuff. Tell us about why the change happened and why now.
Yeah, basically the business had evolved, but the brand had not. Octus has been around for over 12 years and got its start in distressed investing, right? Distressed credit. And for years, we've been doing the entire credit life cycle. So from new issuances through performing, including private credit. So the distressed credit, right? That only covers a small part of the life cycle. So our brand really didn't do us justice in terms of how much value we offer to the customers and market.
Makes a lot of sense. I'm going to go off script here for a second, Jeff, because the wheels are turning. In my mind, private credit is booming. Is that good for you guys?
Absolutely. Private credit, it's just another part of the credit market, but I think there are estimates that it's going to be a $1.5 trillion market this year, and we've made significant investments into our coverage of private credit. In fact, it actually goes back to the brand, which, the word Octus is sort of a play on Oculus, which is Latin for eye. And when we were doing the rebrand, it was all about, how do we differentiate and what value we deliver. It was all about vision and clarity and insights into the world of credit, right? It's a pretty opaque world. And to get access to the data and intelligence and understand what's going on is really difficult. None more than private credit, right? So the word Octus, again, a play on the word Oculus. And when you look at the logo, it looks like a camera lens. It looks like an eye a little bit. So it supports that whole notion of vision, clarity, and transparency.
Just one last question on this credit point. Has the role of big banks or even regional banks been an important part of the story? As in, is there a private credit boom because the banks are not lending like they used to 20 years ago?
Absolutely. Direct lending, private credit, different words of the same thing. The financial markets are evolving, right? And banks are figuring out where they used to be able to, generate business. Now, institutions are looking for more streamlined, simpler funding models, hence private credit. So I think you're going to see a continued evolution, but this is definitely a trend that's not going away anytime soon.
So tell me about the competitive landscape and how you guys are different from your competition.
I'm not going to name any competitors, John, come on. I will say though that, the way that we think about how we differentiate is simple. It's breadth and depth. We have by far the broadest coverage of the leveraged finance world. So high yield bonds and loans. We cover more companies, more industries, more CLOs. We have the largest fundamentals database in the world. We cover 6,000 new issuances. We have access to over 5 million documents. That's just a breadth that no one else can match. And the other thing, we go deep. So in terms of how deep we cover an industry, a company, a particular bond or loan, we have over 300 people in our company. We call them the trifecta, right? It's financial analysts, lawyers, and journalists. And together, they work together looking at all angles of the credit world, of an industry. And they work together, pulling data, identifying scoops and breaking news, and doing all the analysis and some really complicated information, providing that to customers. So we go deeper. I was just reading an analysis of a company, literally 30 pages. Now I got my MBA, so I can read a balance sheet, but the level of depth and rigor that we go through is pretty impressive.
Well, it's funny. I hate to talk about myself, but I had my first job across the street here at Morgan Stanley in debt capital markets, so I'm familiar with that. I took way too many black cars home at 11:30. So let's talk about the capital markets. Speaking of debt capital markets, we're here at Nasdaq. What's going on in that world? How is it evolving? You touched on it a little bit, but how does that pave the way for you guys to succeed?
Yeah, it is about speed and trust of what is going on. And we're focused on credit. Like that is our world, high yield credit. And as private credit expands and companies need to understand where is the next investment, so we basically help companies in 3 ways. Number one is basically identifying new business opportunities. So you have an advisor, an attorney, a law firm, or an investment bank. What is your next investment going to be? The other is just validating the work, right? There are tons of financial analysts out there that are running their models, but they might need an extra data point or to validate exactly what they're doing. And they can do that by pulling our information from our platform, or they can actually call our people. Those 300 trifecta, our experts, they're available. We do thousands of phone calls a year, so it's validation. And the third, and perhaps the most important way that we help, is through saving time. Imagine 6 o'clock in the evening, you're at your distress desk, and you get a call.
Don't
hey,
bring me back.
Yeah. You get a call. Hey, we're looking at a certain company. You can go to the Octus platform and literally type in the company name, and within minutes, you will have all the documentation, analysis, articles, scoops, breaking news, everything you need to know at your fingertips. So it's a real time saver. What would have taken an analyst, 4, 5, 6 days to get up to speed, you can do in 2 hours.
So I'm really intrigued by this journalism angle, obviously, as a journalist. So you hired a ton of journalists.
Absolutely.
And why is that? Because news matters, and what's public perception is reported, et cetera. Like, explain to me why you made that kind of investment, because I'm a little surprised to hear that.
Yeah, no, I mean, journalism and this trifecta, the analysts are just the lifeblood of Octus. And it's about speed. So first to market, the first to get the scoop, the first to understand what is happening, who might be an investor, what credit might go into distress, right, based on some news. And so having people that the market trusts, right?
Right.
So we're not breaking news that we don't truly believe in and have triple validated. And so it's an important differentiator for us in terms of really helping our customers understand what's going on, again, in that opaque market of credit.
Well, it's interesting, again, going off a little off the map here, but I'm just, again, wheels are turning. There are so many equity analysts out there, even now. I mean, it's not the 90s. There were, equity analysts galore. They had a lot more power.
Yep.
Fixed income analysts, I don't know. You don't hear about them too much. Is it because they're all on the buy side? Like, what's the story? Where are these people?
Yeah, a lot is because they're on the buy side, and a lot because, again, the world of credit investing is just fundamentally different than equity investing. There are fewer of them out there, right? There are fewer companies, and the ability to get information is a lot more difficult, right? Hence the value of Octus. Some of our competitors, right? It's just a lot more difficult, to get that information and to make decisions based on that. So the fact that they can trust a source like Octus is incredibly valuable to them.
So Jeff, I like to be an optimist in general. However, I think that AI has been a little bit overplayed in some cases. Tell me how you're really using it and how it's really helping your clients.
Yeah, I mean, our philosophy, and it's funny, Sri, my colleague, hey Sri, he's been at Octus for almost a decade, and we've been doing AI long before ChatGPT made it mainstream,
right,
and all the buzz. And our fundamental philosophy on AI is how do we help customers? And we do that in two fundamental ways. The first is basically we use all the AI tools to essentially get the information and get more information to our analysts, to the trifecta, quicker, right? So they can do the analysis quicker. They can spend time on more high value analysis. And so they can get their information quicker to our customers. That's number one. The second thing is we have what essentially is like ChatGPT for Octus. So you go to our platform, we call it Credit AI. We're about to launch Credit AI 2.0 next week. It's pretty exciting. And essentially you just type in any prompt you want. A question, get me up to speed on this industry, what's going on with this company, I heard this rumor about so-and-so, you put a name in of an investor, whatever it is, and ChatGPT will literally go through the entire Octus database, all of our data, all of our articles. By the way, we write about 50,000 articles a year. So instantaneously, like a ChatGPT, you get all of that information. It's pretty incredible, and it's just gonna get bigger. In fact, when you say, the hype, I think it's just the beginning, honestly. I think it's gonna get more valuable and more ingrained.
Well, I didn't mean to put you on the spot. It's just, there's so many companies talking about it, and what I'd like to hear is a real explanation of how you're putting it to use like that.
And by the way, our users are in there every single day using Credit AI, so we're excited.
So let's talk the future, 2025, right around the corner here. What are you guys focused on? You've got 2.0 for Credit AI. What else is cooking?
So as a marketer, right, we just launched the brand of Octus. Now I have to activate the brand, right? So that's going to mean, for me, a lot of digital marketing. We're going to be out in a lot of events in the marketplace, really defining, like I've done here, what Octus is and what we mean, across the entire credit life cycle. So that's number one. And my boss and my board really wants me to drive more pipeline for our team. From a business perspective, we're really focused on two things. One is broadening our coverage. So continued expansion into private credit and just more coverage. That's one of our value propositions is from an industry perspective, we cover 1,700 CLOs, over 6,000 issuances, and so just continue to broaden that coverage. And the last thing is, with this expansion of data and products, we need to make sure that all of this is accessible really easily and simply for our consumers. So whether that's credit AI or whether that's custom dashboards, really making all of that information from Octus easily consumable.
So Jeff, I want to ask you a question. We're talking about the rebranding. Your customer client base is not just distressed debt stuff anymore at all.
No.
It's much broader, and it is also probably very international. You can have clients all around the world, I imagine, right?
Absolutely. Our biggest region for sure is North America, but we have clients in all the major regions. So we have a huge presence in EMEA, London, many other offices as well, and we also cover the APAC market. So all of them are important. Some of the APAC and some of the EMEA customers are based in EMEA, but a lot of them are based in the US and have businesses and investments, obviously, and a lot of AUM in those regions. So yeah, totally global. And again, just to reiterate, it's the entire customer life cycle. It's the entire credit life cycle. So again, from new issuances through performing, and then of course, unfortunately, if companies do go through that distress phase, we are there to cover it.
Just one last question, Jeff. So at our annual conference down in Palm Beach, we had a panel, and I think the title was "Taking the Next Step from Equity to Credit." Companies can get equity, early on. Are you seeing companies go to the credit market earlier or faster than they would have in the past?
Yeah, I think they're seeing both as a funding source and a source of profitability. You can get great returns on a risk-adjusted basis and be able to fund your enterprise very effectively through the credit markets. So that's why I think you've seen credit markets explode, especially private credit.
All right, Jeff, we're going to leave it there. Thanks so much for joining us. I'm John Janarone, Editor-in-Chief of TechEdge, signing off here from Nasdaq MarketSite.